In this video, I'll be using data analysis to compare the COVID-19 stock market crash of 2020 with other major stock market crashes in history. Welcome to DA Data Analytics Trader. My name is Ricky Chua. If you'd like to uncover insights into the stock market using data analysis, consider clicking the like and subscribe button below so you'll catch up with all of my info-packed videos. Alright, let's get to today's video. On the 16th of March 2020, the stock market had one of its worst days in history. What happened was the COVID-19 global pandemic was already locking down countries all over the world. To make matters worse, just that weekend before, crude oil prices were sent tumbling. The market awoke on the 16th of March to utter chaos and panic. The Dow Jones itself lost 2,997 points, the S&P lost 324 points, both of these in a single day, wiping out trillions of dollars and then solidifying its place in articles like this as saying the worst point drop in history. But is it really fair to say that March the 16th, 2020 is the worst stock market drop in history? Is point drop a good metric to measure stock market crashes in the first place? So I'm going to be using R programming to do some data analysis. I'll be getting my information from Yahoo, and I'm going to be taking S&P information all the way back 100 years, all the way back to even before the Great Depression. And using this, I'm going to determine which are the actual worst stock market crashes in history by percentage-wise, and to see whether articles like that are accurate in terms of saying the COVID-19 crash is the worst in history. So let's get started, shall we? So using data analysis, we can easily sort the 10 worst days by point drop in history, and we can see that true enough, the 16th of March 2020 is the worst single day point drop. The S&P 500 lost 324 points. But you also notice though, interestingly, that 8 out of those 10 days were also in the year 2020. It was March the 12th, March the 9th, March the 11th, and so on. If 8 out of 10 days were from 2020, does it really solidify the fact that COVID-19 caused the worst stock market crash in history? Well, point-wise, maybe yes. But here's something strange though. You'll notice that in 2018, there's a day in 2018 that showed up, and that's February the 5th. What happened on February the 5th of 2018? It was just another sell-off for the day. There wasn't any particular crash. Why did just any other sell-off for the day appear in the top 10 worst crashes in S&P history? Something is clearly not right. So what we probably should do is then to look at this from percentage change. Let's take a look at the chart of date versus points change for the day, and let's see what we get. So this chart gives us a scale of what we're talking about here. The magnitude of the change for the recent crash of 2020 really stands out. In fact, there's nothing else in the 100 years history that even comes close. But then the question would then be, where is the crash of 2008? It barely comes up as a blip. What about the dot-com bubble bursting in 2001? Where is the Great Depression of 1929? You barely see it. So this gives us a clue that this really isn't the best way to be measuring stock market crashes, is it? So let's uncover the reason for this discrepancy. The reason is actually very simple. In the beginning of 2020, the S&P 500 was worth 3,235 points. In 1980, which was just 40 years ago, the S&P 500 was only 106 points. That's a 30 times difference. But compare that to the 1930s. In the 1930s, the S&P was 21 points, which means today the S&P is more than 100 times the value of what it was in the 1930s. In 2020, if the S&P 500 lost 1%, which is fairly common, a 1% loss in the S&P 500 would be equivalent to wiping out the entire S&P in the 1930s. Using point losses to measure stock market crashes really just doesn't make any sense because it doesn't give perspective of the ratio of the stock market prices in history. Therefore, the reasonable thing to do is of course to measure them by percentage change. If by going by percentage change, we can see that the worst single day percentage change loss is Black Monday of 1987. On that day, the S&P 500 lost 20.4% in a single day. Coming in second is the Wall Street crash of 1929. So on that day, S&P lost 12.9%. The COVID-19 crash comes in the third. So on the 16th of March, S&P 500 lost 11.9%, coming close to 12%, which is already a very significant amount. Looking at this visually, we can see how clearly Black Monday crash of 1987 is truly the worst. Just looking at the magnitude of that line in 1987 and compare it to COVID 2020, imagine the panic that we had on 16th of March in 2020. double that amount. That is what Black Monday would have felt like in 1987. Here's something interesting as well. Out of those 10 worst days in terms of percentage change, 3 of those days came from 1929. Now, those 3 days in 1929 were 15 days apart from each other, which means to say, in a 15-day period, the S&P consecutively lost huge chunks of its value. It just kept going lower and lower and lower in a 15-day period. In 2020, 2 of those days were terrible as well. The COVID-19 pandemic did cause the S&P 500 to tumble quite a bit. What if we took a rolling window of 15 days? So let's plot that out and let's take a look at what we get. And the results tell us that the Wall Street crash of 1929 is the worst percentage loss over a 15-day period. You probably could already guess. 3 out of 10 of those worst days were in 1929. How did 2020 fare? 2020 turns out is not the second nor the third. The COVID-19 crash of 2020 is the fourth. So coming in second in terms of this window is still 1987. The Great Financial Crisis of 2008 will register as the third in terms of the worst 15-day period in history. So putting these 3 different metrics into perspective, this is what we can see. In terms of single day points losses, there is no question. The COVID-19 crash of 2020 comes in as the worst single day point drop. Looking at percentage loss though, we see something quite different now. The worst single day percentage loss happened in Black Monday of 1987, followed by the Wall Street crash of 1929, then COVID 2020 came in position number 3. But looking at the rolling window of 15 days, we can see that the Wall Street crash of 1929 will come in first, followed by Black Monday of 1987, then the Great Financial Crisis, then COVID 2020. And that's it for my video for this week. If you enjoyed my content, please click the like and subscribe button below. Do leave me a comment to let me know what you think of my content, and also give me any suggestions you would like for future videos. Until my next video, take care, stay safe, and bye bye.